To begin with, I would like to call on Charlie Dupree to walk us through some of the pertinent stats and figures on cross-border deals. Charlie?
We have two quick pages. The first page that's in front of you now, this is page 3 in the presentation, simply shows the cross-border volume over the last decade. And you'll notice two things about this. Number one, obviously, it peaked in 2007, over $1.8 trillion of deals, and then it troughed in 2009 at something around $500 billion of deals. And 10 and 11 really have shown significant recovery from then, but 11 and 10 look about the same. The other point to make on this page is the line graph. You'll notice this is the percentage that cross-border deals represent of total deal volume. And you can see that the numbers bounced around, but it really is pretty consistently over the last 10 years, around a third of overall deal volume is in fact cross-border. The next page takes a more granular look at the America's cross-border M&A volumes. It's a little bit of a busy page, but there's a couple things I'd like to point out. The first is that the box in the upper left, the one that says America's cross-border M&A volumes, this is really just the same version of the chart that you saw on the previous page, except it's America's only. And you can see that the same trends, right, for global cross-border M&A are also resident here in the Americas. The more interesting chart, I think, is the larger chart to the bottom, the region-to-region cross-border M&A volumes. And here you can see the blue box is 2010 volumes, the orange box is 2011 volumes. And you can see for Americas into Europe, so this is American companies buying European companies, that volume from 10 to 11 increased by 61%. If we skip over to look at Europe to Americas, 10 to 11, you can see that volume fell off 27%. However, if you look at the two orange bars for 2011, you'll notice that they're about the same. So while there's been a big pickup from 2010 to 2011 in Americas into Europe, we're really now at about parity, where there's about the same number of volume into the U.S. from Europe as there is vice versa. I think that's really the most important trend over the long period of time. You have strong corporate buyers in both markets who are looking to grow their geographic footprint. And I think if you were to look at 2010, you would probably conclude that that was a bit of an anomaly and was really a function of where the U.S. economy was and the risk to the U.S. economy in 2010 versus what that relative risk was to Europe in 2011 with the Eurozone crisis.
Okay. One obvious question, Charlie, I'd like to start off with is, for the past now almost 2 years, almost daily, word from Europe is doom, gloom, and maybe even collapse of the euro, yet according to the figures you've just mentioned, you have this huge uptick of U.S. M&A going into Europe. How do you square the two?
Well, look, I think it's a matter of relative value. You know, Europe is a strong economy as a global matter relative to other places you can put your money. It's true that there are clearly headwinds in that market, but if you're a U.S. buyer, there's never been a better time in order to take advantage of where valuations are, relative valuations are, and candidly, if you're a European company and you're facing the risk profile that you're facing, to be de-risked and taken out with a premium in those circumstances can be attractive to investors.
You've talked about an increase over the trough of 2009, but if we look back at those charts, you'll see that the spike really, or the top line came in 2007, and I'm sure that everybody is particularly interested, maybe two things. What is really holding back global M&A or cross-border M&A from approaching those peaks? And do you have any prognosis of when you're going to see some tailwind?
Yeah, well, look, I mean, over the course of time, the correlation between M&A activity and equity performance is very, very tight. That may not be true on a quarter-to-quarter basis, but it certainly is true on a year-on-year basis. 2007, everyone will remember, was a strong year for the equity markets, and not surprisingly, it was a strong year for M&A. Equity markets actually hit their lows in '09, and guess what? So did M&A. So it really is a function of, at the end of the day, of corporate confidence, boardroom confidence, CEO confidence, and that is going to be, the best measure for that is going to be in the equity markets. And so as a prognosis matter, I would say, you know, it's a function of the conditions right now are very attractive for M&A, but I would say it's probably unlikely that we'll reach 2007 levels for quite some time.
Okay. All right.
Yeah, I was just going to comment, Charlie, you know, we've coming into the first quarter of this year, we've now hit our fourth consecutive decline in global M&A volumes, and in fact, this first quarter of 2012 was really the worst, I think, since the fourth of 2009. Despite that, people look at the health of corporate America, they look at the private equity firms, they look at some of the companies in Europe also that have been building cash. There are several elements present in the corporate and private equity worlds that suggest that there should be an uptick in M&A activity. There's a tremendous amount of cash on corporate balance sheets, both here and in Europe. The private equity funds have got a ton of dry powder. Low cost of borrowing is driving the current refinancing market in the U.S. just crazy, and you'd think that that would tail into M&A as well. Confidence seems to be up, although it's not yet reflected in new offerings. So there do seem to be the elements. Some commentators have referred to it as a potential perfect storm for a significant uptick in M&A.